All right, welcome to the daily market recap for Monday, October 27th. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. We do still have the sale, 32% off if you use the code HBD32 for my 32nd birthday. That sale does end tonight. So if you ever wanted to try Market Pulse out, get your first month off 32%. All right, starting with the NASDAQ, another gap up and go day today. We had the big shakeout on October 10th, big distribution day, basically 7 days of chop within that range, and then a shallower shakeout on October 22nd. That was on Wednesday, excuse me. Strong action Thursday, gap up Friday, gap up today. We're definitely going vertical at this point because a lot of the mega cap stocks are rallying into their earnings, which is still bullish to me. At this point, we are extended from the short-term moving averages, so I wouldn't be looking at the mega cap stocks to really get exposure going. But we could see some mega cap stocks do well on their earnings, some do poorly, and the next week or so just kind of like chop slowly down to the 5-day moving average in this gap zone while money rotates into other themes in the market and still be perfectly fine. What we don't want to see here is another unfilled gap up and like really accelerate this trend because I've been using 2020 as an example of like mentally how to prepare for this market. And we did get an acceleration phase in 2020, right before September's correction, where we had a big shakeout to the 20-day moving average, shallower shakeout to the 5-day, and then multiple gap ups. And the last like 4 or 5 days was extremely profitable if you were trading on the long side. But at the point where we actually closed back under the 5-day moving average, it was time for a full correction, about two months or so of correcting before the end of the year rally and then into January and February. So I would rather kind of chop sideways here for the next week or so, let money rotate to other areas of the market instead of going into that acceleration phase. And then we have to go through a full correction before price action gets clean. But I don't control the market. We'll take this day by day. S&P 500, also two unfilled gaps to the upside, new all-time closing high of 1.2%. IWO, the growth stocks of the Russell 2000, still hasn't made a 52-week high since October 15th, but getting very close to that level. Still not at all-time highs either. That was back in February of 2021. This is where if the indexes pull back, if the mega caps pull back and money rotates, this is the spot of the market that can really get going to the upside. ARKK, really like how this is shaping out. Big shakeout on Wednesday last week, closed back through the 5, the 10, the 20-day moving averages on Thursday, and then just kind of gap up and chop higher for the last 2 days. Little pullback into the 10-day, even the gap zone low 20-day moving average would still be perfectly healthy in my eyes. Then taking a look at Bitcoin, we've got another higher high, higher low into the 50-day moving average, starting to reject that a little bit. But after two higher low tests of the rising 200-day moving average, mentally now I'm thinking more bullish on this. But again, we'll take that day by day. Ethereum, rejection of the 50-day moving average. Let's put in another higher low, maybe at the 5, the 10, the 20-day, around $4,000, and then can get going from there. Getting into the liquid leaders, today's leader was Tesla. Awesome action. So they reported earnings last Wednesday after the close. Thursday, they gapped down, undercut and reclaim. Well, basically undercut the support gap low, got right to the bottom of the support gap low, found buyers at that area. Huge accumulation day on Thursday. Weakness Friday into the 20-day moving average. But if you go back and study previous market leaders while they're basing or while they're flagging out, the best thing that you could see is an ugly close. Typically under the 20-day moving average would be a little bit more ideal to get people just like scared out. But an ugly close followed by an unfilled gap up. You see that reignite uptrends all the time when you study previous market leaders. So this type of action makes me extremely bullish on Tesla. Even if it comes back down to that 20-day moving average and what would be a support gap, that's a spot where I would look to size back up 4.3% today. CRT, new all-time highs up 3.7% with another gap up. Google, new all-time highs up 3.6% with the gap up. AMD, new all-time highs up 2.7%, closing at the high of the day. Palantir, new all-time highs up 2.5% with another gap up. Like the shakeout on Wednesday through the 50-day moving average and the support gap, followed by those 3 days of strength. Rocket Lab closes back over the resistance gap overhead and the 5 and the 10-day moving averages, up 1.6%. Great action there as well. MU, new all-time closing high, up 0.5% for the day. We did open a little bit higher than we closed, but I mean, we're really arguing over a couple points at that point. PE down 1.6%. Some energy names were relatively weak today. We saw Oklo, the nuclear stocks, GEV, still kind of weak there. So BE, it doesn't really surprise me that this is just chopping. This has earnings tomorrow after the close, so make sure you manage risk accordingly. And then SNDK, another gap up, which was our second one back to back, really starting to get stretched to the upside. Today opened on the high, never took out its pre-market high, which is usually a sign for like a reversal when it's extended. And then we closed near the low of the day. Uh, Still over the 5-day moving average, still on less volume. So I wouldn't completely count it out, but potentially a weekly extension there. Getting into the industry ETFs, we'll sort that by price percent change. XBI, biotechs, they've been the leader, or at least a leading theme for a while now. I keep kicking myself because I entered the trade perfectly on August 12th after a higher low test after the 200-day moving average into the support gap, 50-day, perfect pivot. And then I sold it October 3rd. From there, it's obviously gone up. Couple tests of the 10-day moving average got supported. Really great action here, and definitely feels like the healthcare and healthcare adjacent themes are the next benefactors of AI. So the rest of this year, the beginning of next year, healthcare and healthcare adjacent names are going to be a focus for me. Semiconductors, new all-time high with another gap up and strong close, up 2.5% today. KWEB, Chinese internet ETF, Chinese stocks and equities as a whole, very strong today after it seems like we're getting closer and closer to that official deal with China. We saw that big distribution bar on October 10th when Trump first tweeted out that there were more 100% tariffs coming on China. Kept tweeting the next 7 days, but we kept building higher lows, which was a good sign that that was getting absorbed. And I say this almost every video, but Chinese equities are just breaking out of a 3.5 year base. They just checked back to that breakout point and now are resolving higher while tensions are still relatively there. I think this is another major theme to focus on for next year. Couple other ETFs, XLY, consumer discretionary ETF. Very surprised with the action here. I really thought this was rolling over on October 10th, but instead of following through to the downside, we gapped up and from there just built higher lows. Now we're basically back to 52-week highs. The robotics ETF really feels like the next to go. Where like biotech and in Chinese equities, I think they're going to make big moves over a longer period of time. I think robotics, like right now, if the market stays hot, that's the theme that's going to have the largest pushes. Software, great action with another gap up today. Aerospace and defense, new all-time highs, strong action. And then XLF, the financial ETF. This was the one I was most concerned about because we had two major distribution days, October 10th, like everything else in the market, but then October 16th, as we got a bunch of regional banks coming out, their earnings coming out, we actually took out Friday's low. Not many themes took out Friday's low, so that was concerning to me. But we still didn't follow through to the downside. We followed through back to the upside, tested the 50-day moving average. We now have three unfilled gap ups into that area. So even though, like, even if we pull back here into the 10, the 20-day moving average, right around like $53, I think that would be okay. But obviously, the sooner that we close the 50-day moving average, the better. But that was a major concern that, hey, the market, like even though the indexes are bouncing back, maybe the market's not going to be strong because we're going to lose financials. And we didn't end up losing financials. And that's why we take this day by day. We can have a bias going into each day, but we should stay flexible and be objective to what we're seeing in the market. A couple other themes. Nuclear bounced right where it needed to on the support gap low, reclaimed the 20-day moving average. Still some weakness out of that theme and a lot of distribution off the top. So even if we kind of rally, I think this needs like another base before it makes new highs. Metal and mining themes gap down, lost like Friday and Thursday's low, and gold miners taking out the bounce right around the 50-day moving average on October 22nd, taking out that low, also lost the 50-day. So some weakness there. Before we get into the long and the short setups, just wanted to again show that we are in the middle of earnings season. Make sure that you know when the stocks that you own or the stocks that you want to own report. SoFi, before the market opens tomorrow, will be pretty interesting to me. Royal Caribbean, Wayfair, DHI, a lot of home building stocks this next week. Enphase after the close, BE after the close tomorrow, Visa as well. And then really like the mega caps start reporting Wednesday. We have Meta, Microsoft, Google, Wednesday after the close. Thursday after the close, Amazon, Apple, and then a bunch of growth stocks, Coinbase, Reddit, MicroStrategy, etc. So again, we're in the middle of earnings season. Make sure you know when your stocks are going to be reporting. Long setups will go most liquid to least liquid. First one is open door. We had our first test of the 50-day moving average that wicked lower and then closed really well. Followed that with two unfilled gap ups. On Friday, we reclaimed the 5, the 10, the 20-day moving average on a closing basis. And then today, just really tight action. While the mega caps led, a lot of growth stocks just kind of chop sideways. It's exactly what open door did. Not doing anything wrong there. If we do get a little pullback into like the 750 area, that's a spot that I would be willing to size up on. If we take out today's high as kind of like a performance booster momentum trade, then my stop would be at today or the low of tomorrow and just try to play for that little momentum boost. PDD, we talked about Chinese equities really starting to shape up. I'm in BABA trying to look for some more exposure. PDD, let's go to a weekly chart on this. Massive, massive base here. You can draw a downtrend line and you'll see we're right on that breakout point at this point. One of the only Chinese equities that are actually above their highs before that October 10th distribution day. So if you're looking for relative strength in a theme that could potentially be turning up after that 3.5 year breakout, PDD is there. It's not the fastest moving stock, ADR of 2.5%, but as we're just like starting to see some traction in the theme, I do try to focus on the more liquid names first, not just like the fastest moving ones. And then I could pepper in those like high beta stocks as kind of performance boosters. So with PDD, don't want to chase it higher, just looking for a pullback into like the 5 to 10-day moving average, right around 133, 134 as the entry. Stop, use just below 130. That would get under the 20-day EMA. Next to our semiconductor names, first one, ARM. Perfect test of the 20-day EMA on October 22nd. Really kicking myself for not taking that because if we zoom out, nice big base here. Hasn't really participated in the rally just yet, but I can ignore that when a stock has a base this large and it's not already extended. Tried to get going through the resistance gap today on some partnership news. Didn't quite get there. So we know sellers are still present in this area. We don't want to buy on strength. So pull back into today's gap zone into that 170 area. That would align with the 10-day moving average catching up. And then depending on your position sizing, you could get your stop under the support gap low below that, or just use a 2 or 3% stop. NVTS, this was viable today on the undercut and reclaim of the 10-day and the support gap low. Just looking for another like pullback into that area. Huge volume earlier in the year, May 22nd, highest volume ever, followed by nice sideways action, and then another big explosion in volume up from $6 to 18. Now, very little volume as we consolidate into the 10-day, into that support gap. So again, that 1360 spot is the spot to watch. Stop would be today's low. JOBY, this kicked me out. I was in it from here. We had a secondary offering, got stopped out on that trade. We did confirm that resistance gap. We couldn't push through that. The market was kind of weak and choppy at that point, so I don't think that's the worst thing. Now we've pulled into the 50-day moving average. We bounced, and I would be fine kind of playing this both on strength or on weakness. If we see money rotating from mega caps into small caps. So don't want to see a gap up on the indexes tomorrow in that scenario. But if we get like a gap down on the indexes, money rotating to growth stocks, then through the previous 2 days highs would be buyable, stop at today's low. If we get a little pullback in the market, this gap zone, undercut and reclaim versus the 50-day moving average and the low from October 23rd, I would be much more comfortable sizing that up. TEM, another healthcare adjacent name, nice action off the 50-day moving average after making new all-time highs. Just looking for another pullback. This is a stock that if you go through each of the bars and you say, okay, I'm going to buy this on strength, you would have been stopped out like 17 different times. So instead of buying it on strength, especially buying on strength near a resistance gap, I want to buy it on a undercut. So undercutting 29.20, the 5, the 10, the 20-day moving average, and today's gap zone would be the spot. Even coming down to 87, especially if the market pulls back, I think that's an even better spot because then you can manage risk against a key moving average, which would be the 50-day moving average. Path, kind of a miss on my part. I didn't want to put like my first exposure back in the market in something a little less liquid. But keeping in mind that like the robotics theme is really starting to heat up, I think this is awesome action off the 20-day moving average. Again, don't want to chase it higher, but have alerts at 1650 area for a pullback into the 5-day in today's gap zone. Manage risk against the 10-day EMA. EOSE, another name that just phenomenal action on the way up. Little distribution, but a lot of growth names had really ugly action during this time. And this is really just, I mean, realistically, going slightly down, consolidating, lower volume on that pullback. It would be perfect if we can get another pullback into the 20-day moving average, right around 1445, 1450. Or a gap up, opening range break, stop at today's low for a kind of breakout and retest of that flag. GLXY, this did a secondary offering and right now is trading around the support gap and pullback low at 3620. So let me switch to a 5-minute chart just to show that. So in after hours, we're right into the support gap, perfect undercut and reclaim of that so far. So if we do get like a more weakness in the market to start tomorrow where we gap down, an undercut and reclaim of that area would be viable for kind of like a snapback trade. But then just keep your risk really tight. If we bounce and then roll back over, no need to stay with that because we do have a resistance gap. This is the secondary gap down, already a little extended, but we'll see. AOI, this has been a pain to watch because I've been super patient trying to find an entry on like a support gap area. We got one on October 14th, didn't undercut the past couple. So far, this has just gone without me. Just keeping an eye on a breakout retest of the 5-day and the gap zone from today, right around $34 as the entry. Stop would be the 10-day EMA. Then iNod, another name, huge explosion from 36 up to 94. Pullback under the 20-day moving average, wicked into the support gap like within a couple minutes and bounced. Now we're back through those key moving averages, looking for a higher low, right around $75 as the entry, and then stop would be under the low from October 23rd. And then finally, CLPT, another healthcare name, big move from 10 up to $30, pulling into the 20-day EMA. Volume is lightening up. A gap up through today's high would be viable, or a shakeout under today's low, the 20-day EMA. Reclaim that area. I would size that up a little bit more aggressively. Then on the short setups, I have the overarching theme as the quantum names being still shortable. We've had major distribution from RGTI since our first unfilled gap down. I always say trends do not change until you get a unfilled gap in the opposite direction. That was an awesome indicator for RGTI when we had that unfilled gap down, and then just tons of pressure there. We bounced for like 3 days. Today was an inside day on lower volume. So even though the market was super hot and other parts of tech were really nice, this just bounced it and got sold off into the 10-day moving average. So a couple different ways to play this. Just through today's low, would be a short on weakness. Then you can manage risk against whatever tomorrow's high is, probably the 10-day moving average as well. I would like to see a little rally back up to the 10-day so then I can manage my risk against Friday's high. IONQ, another quantum name that, again, the trend changed when we had an unfilled gap in the opposite direction. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days where we've closed below the opening price. 10 basically distribution days. Like the last 3 days we bounced, but every day we're gapping up and selling, gapping up and selling, gapping up and selling. So at this point, like you didn't want to start your short down here. You wanted to get short right after the gap down. But now we've had 3 days of bouncing, very weak on the volume, very weak closing ranges on each of those bounce days. Just one more test of that 20-day EMA, and then a loss of the daily view app would be the short versus today's high. And then last one, I think this is probably the best of the quantum shorts, is QUBT. I say this in the Market Pulse Discord a lot, but if you're trying to short like a theme that's breaking down, you want to short the weakest stock within that theme, not the strongest stock. You don't want to pitch against Barry Bonds when he's on steroids. You want to pitch against a AAA ball player. And RGTI, like in its momentum like phase, was Barry Bonds on steroids. You are not getting past that. QBT is the opposite. We haven't made new highs. We rallied up into the resistance gap and immediately sold there, but didn't make new highs. Well, IONQ, RGTI was 100, 200% over their highs. Multiple resistance gaps down. We lost the 5, the 10, the 20, then we lost the 50, came all the way back into the base. So again, just a reminder, we have RGTI, which the base was like kind of a base on base, and then broke out from 15 up to 58, still trading at 40. QBT is all the way back into the base already because it's the weakest in that theme. Today closed on the low of the day, didn't even touch the 10-day, just extreme weakness here. Would look for a little gap up, loss of the daily view app as a short, stop at today's high on that. MSTR, we've had great strength in Bitcoin the past couple days, and MSTR really hasn't done anything. We've bounced like 2.5 days, closed still under the 10-day moving average. We gapped into a resistance gap where sellers stepped in right at $300. I still want to see like one more push here, so I'm not shorting a little early. We saw pushes over a key moving average before, and then a big like 10-day wave down. So I don't think we're going to get up to the 200-day or even the 50, but a little rally up to the 200-day, or sorry, the 20-day EMA and the previous highs here, right around 306. That would be the spot that I would be looking to get short and then keep a stop over the gap down high right around 316. SNDK kind of hinted at this in the leaders list. Today was probably the right time to short because, again, if we go on that 5-minute chart, you'll see this with extended names like SMCI and MSTR when they did their parabolic shorts. I wouldn't classify this as a parabolic short. We never quite got the volume, but we did get another gap up pre-market, and then we never took out that pre-market high. We saw sellers right away. It does feel like this could be kind of the end of that trend. Um, but I still don't want to like chase it lower. Let's see a little rally back up to like 185 area. So then I could keep my stop at the high of the move and keep my risk managed. It's not my highest conviction trade, but one of the few like stocks that didn't correct at all when the other growth stocks pulled back. So it might be a theme that is time to rest a little bit. RCL, this has earnings before the market opens, so I'm not quite sure how this is going to open, but it's a name that has already made a massive move. We've seen like average consumer stocks starting to weaken, whether it's like SFM, Costco, basically things that the average consumer touches, not doing super well. So thinking Royal Caribbean, that's like your vacation for the average consumer. That's me. I have gone on a couple of Royal Caribbean cruises this year. Really fun, but I do think the action recently is not ideal. We made new highs and then immediately gapped down, lost the 50-day moving average, failed at it multiple times. Carnival Cruise Lines gapped up on their earnings and sold off immediately. That was on September 29th. So depending on where we open up, like if we open up on the 50-day and then a loss of the daily VWAP would be the short, high of the day would be the stop. Or if we kind of just like open up where we're at through today's low, stop at the resistance gap high would be the trade. Another stock that has earnings tomorrow that I'm interested in shorting is MMYT. If you watched the channel, you know this is a short that I've been watching for a very long time. We got our massive stage 2 uptrend, our month-long stage 3 top, where we have lower high, lower high, lower high, lower high, lower high, lower high at a declining 200-day moving average. Accelerated move lower, close below the last support gap, rallied today into the 20-day and the resistance gap, got rejected there. In a perfect world, we'll get like a big gap up tomorrow, like at the 50-day moving average, $96. And then I would look to short that pretty aggressively. It's a slower moving name, so like sizing wise, you can actually size a bit into it and be okay. Otherwise, if we gap down, then an opening range break would be the short, and I don't see any support until like $75. So for a slower moving name, got plenty of room to the downside. Then last, and then E, we talked about how the nuclear names were a little bit weak. This should also be a resistance gap. I'm just seeing this. Um, the nuclear names were pretty weak. This bounced at the 50-day moving average, had a couple nice days coming back into the key moving averages. So we're not shorting it, already extended to the downside. Kind of feels like today was the right entry where we gapped up, lost the resistance gap high immediately, and then sold back down. Just looking for a lower high rally into the lower part of the resistance gap, $45, then keep our risk, the stop at today's high. So that's going to be the daily market recap for Monday, October 27th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, enjoy 32% off of your first month at Market Pulse by using the discount code HBD32 for my 32nd birthday this past weekend. That code does expire today. So if you ever wanted to try Market Pulse out, this is the month to try it. This is the day to try it. Otherwise, have a great night, and I'll see you guys in tomorrow's video.